Welcome to Beers with Rich. I'm Rich, editor of Under the Radar Report. Boy, do we have a big one for you this week. This week's beer brought to you by Tallboy Moose and Victoria. Let's crack it. Serenity now. Look, this week I want to focus on technology, specifically technology stocks, which we all know have been hit hard as interest rates rise. Investor tolerance for loss has never been lower, or even marginally profitable companies put to the sword. What does that mean? Opportunities. Look, this is exactly where our value philosophy kicks in. Looking for value means you're always buying something that's been aggressively discarded, and consequently the hurdles for positive surprise are low. Value can occur anywhere, at any time. That's what makes our life so interesting. I look at it this way. If an investor has been driven to distraction by a non-performance of a company, for various reasons, and finally bails out, that provides another investor with an opportunity, and I'd like to be that other investor. So right now, as I've said, value is emerging in technology. As a colleague said, extended ultra-low interest rates distorted the reality field for investors, where they focus solely on revenue performance and not profitability. Well, now the pendulum swung the other way, and arguably the baby is getting thrown out with the bathwater, meaning some actually profitable companies are getting sold off just because they're in technology. Look, why is technology alluring? Well, a lot of it is because it relies on IP. So this means you can generate almost unlimited revenues for about the same cost. So this is operating leverage on speed. This is what we love. And what I like are companies that are well funded and where is at least a line of sight to profitability. Alternative, you've got companies that have business models that provide, that have a boring business that provides cash flow, but they also have an option on greatness with IP. There are also those kind of companies that we support. But this week, 3 stocks that we focused on the engineering technology front, arguably in the first category. So they're engineering technologies in energy. So these are companies with technologies where it's not about the software, but about making energy extraction more efficient, whether it's reducing, the carbon emissions or reducing costs. So one of them I've mentioned in the past, Hazer. They produce a hydrogen from basically methane. So we tripled our money on that stock, buying in at 40 cents, taking profits at $1.30. So that alone says, okay, these are not set and forget investments. You have to be prepared to take your profits, but that doesn't mean the company's going away. It just means that at times the pendulum swings both in terms of exuberance and pessimism. Now it's at it's been as high as $1.70. Now it's around 70 cents. It looks interesting. So what I like about Hazer is the versatility of its technology. So as I said, it converts methane into hydrogen and graphite, but at a lower temperature than other processes because their innovation is using iron ore as a catalyst. So they've had their fair share of problems. However, through supply chain difficulties, that's meant that 2 essential pieces of kit have been delayed until next year. So the demonstration plant at Woodman near Perth, next to a waste treatment plant, isn't going to get going. So this is a bit of a setback. But on the other hand, they're managing to partner up with some big operators and take advantage of the growing market among heavy emitters like steelmakers to reduce carbon emissions. This is exactly the kind of stock that you want to see. They're taking advantage of an existing market, not some pie in the sky kind of future market. So there's another stock that we cover this week that's got a nuclear enrichment technology, and that's got a JV with one of the biggest nuclear uranium producers in the world. And this company in turn is looking to buy Westinghouse Electric, which manufactures and services over half the world's nuclear power plants. So that's the kind of validation and instant market kind of credibility or access that you get when you partner up with big companies that are aligned with your interests. Then there's Lake Resources, which I've also mentioned in the past. This one, we've tripled our money on, but we think it's still going further. They had a win with their technology partner, the Bill Gates-backed Lilac Solutions this week. And they're building a process that basically is going to revolutionize the way lithium's extracted from brine. So basically, it means you don't have to build, their process means you don't have to build evaporation ponds, which makes the process a lot quicker. Don't take my word for it. Read Peter Chilton's report in this week's episode. God, I'm talking so fast, I need some tall boy and moose to slow me down. So it's not too late for Lake Resources. Interesting space, growing market. And this is all exciting stuff, but the good news is there's even more technology stocks that we've got in this week's issue. Stocks that are more on the latter, on the second kind of type of stock, which they actually are cash flow positive and do have an option on technology greatness. So they're worth checking out. And we've got more coming your way, as well as a new mining stock next week. So it's all happening. The beer, Serenity Now, well, I don't know. It's certainly crisp, lemony, lemon myrtle rye season from Victoria. And, here's to a bit of crisp on a summer's day.